On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Florian Grummes, welcome back.
Thank you.
What a turbulent time since Beaver Creek, right? We were sitting there in Beaver Creek, everyone big smiles on their faces. We were in very much bull market territory. I still think we are, by the way. But obviously we've seen then the price ride up to 4,400. We've seen this pullback.
Yes.
Buy the dip or where are we at the moment?
Yeah, I think it was a dip that had to be bought. It's already 2 weeks ago, right? And the market is already up. We traded for 4,150-ish already this morning.
Yeah.
So that means, we are up more than $250 from the lows already, right? And you can see how quickly this happens in this bull market. So when we talked back in Beaver Creek, I said we're going to 3,750, 4,000, 4,400. And more or less, basically, gold has done all that.
Yep.
And then we got this big pullback, $500 within less than a week, right? Six Sigma event in the gold market. Gold was down 11 point something percent. I mean, it was to be expected at some point after that massive rally. We've seen gold rallying more than 30% in 8 weeks. I personally haven't seen anything like that in the 25 years that I'm now active in gold. Some of the guys in the 1970s probably have seen it, but me personally not. And it was necessary, a necessary breather, a pullback. The situation was just too overboard. But interestingly enough, it seems that this cold shower was already enough to cool down sentiment. People are more doubtful again, more hesitating and expecting another leg down. While it probably was the opportunity to buy gold below 4,000 last week and the week before, and maybe we never see it again 4,000, who knows? But the way it stormed off yesterday into the new week, I mean, it's very impressive. And I think, or I see that silver is taking the lead.
Yeah, I think we're back above 50 now, aren't we?
Yes, and it was already strong last week. So it reached that first Fibonacci retracement level 2 days before gold. It also had a very nice, clear, inverse head and shoulder kind of bottom pattern. So that the target is 53 for silver in the short term. Gold around 4,200. And it seems that, probably we will get this sideways balancing out kind of consolidation into mid-December, into the last FOMC meeting of the year. But overall, it looks very strong, very bullish, and I assume next year it will continue. We'll most likely see 5,000 by spring.
Yeah, wouldn't be surprised either. I think it's really tough to try and predict what's going to happen in the short term, but obviously the underlying thesis of why people are buying gold, I don't think has changed much. Something that we've been talking about a bit while we've been here is a big part of why the central banks have really been that fuel behind it. It's obviously the weaponization of the dollar and whatnot, and that hasn't changed.
Not at all.
So it depends what your time horizon is, but I guess in the short term, if we are going to look in the short term, do we feel as though we've had the dip? Because every time we've seen a dip, we've seen all-time highs. We have, over the last couple of years, we have seen some dips. They've always been shallow, and then we've seen the climb back up. This has been a bit more of a dramatic dip, but we are now starting to see a little bit of a climb back up. Is this now the next leg upward? You were talking about leg downward. I'm talking about legs upwards. Where do you think things are going from here?
Okay, so yes, it's been a $500 pullback in gold. In nominal terms, it looks very big.
Yeah.
In percentage terms, it's totally normal. We haven't even retraced more than 40% of that run up since end of August. So it's all totally normal and healthy and manageable in the end of the day. Of course, if you're leveraged long gold and then gold runs $500 against you, it will kill you in your position. But I hope most of the viewers don't do that kind of stuff. And of course, if you bought too late into the mining stocks, maybe in mid-October, you probably are also now a little bit deeper underwater. But anybody who's into that game for quite a while already can clearly see that this is a healthy pullback. We probably have seen the lows. If you go back the last 1.5 years, whenever we had such a run up, gold made a new all-time high and then we got a sharp sell-off.
Yep.
The low came in within the first sell-off. And afterwards it was just balancing out, consolidation sideways, higher lows, and gold trying to break through the back then new all-time high. So it's been always the same structure. Of course, usually the markets make it so complicated that at some point when everybody recognizes a pattern, markets will not repeat it, right?
Yeah.
So maybe there is not a big consolidation anymore. We just move higher from here without much looking back anymore. But I think, I think the rally's intact. It's been a good breather. I have a buy signal on the daily chart for gold. I have a buy signal on the daily chart for silver. So I'm bullish here. With the remark as well that usually seasonal window is a little bit challenging for gold into mid-December. That's where you get typically the final turning point and then the next leg up, because January, February, March are the best months for gold. And you have the Chinese New Year in early February, which will for sure create enough physical buying so that gold will push higher. I'm pretty sure about that. And also in the big picture, I mean, we are in a bull market. Things should accelerate from here. A lengthy half a year, 1 year kind of sideways correction consolidation would not be typical, right? So I assume things will accelerate. And like you rightly mentioned, I mean, on the fundamental macro kind of level or perspective, nothing has changed. Things are actually getting more dire by the day, I would say. I'm of the strong opinion that the West is only bluffing anymore. It's basically vice versa what we've seen during the Cold War between 1960 and the late 1980s, when the East was bluffing all the time, and actually America and the NATO and the Western alliance was strong. And now it's, I think, vice versa. And the confidence in the US dollar is diminishing by the day. You mentioned already central banks in China buying gold a lot. We've seen also big imports of gold into India recently. Poland has announced they want to ramp up their reserves, the central bank reserves, up to 30% in gold. I mean, this is all continuing and accelerating. So, I mean, it's a gold rush, and this will not stop until we are at totally different price levels. So, I think there's all reasons to remain bullish. The easiest to profit from it, of course, is simply buying the physical metals. We talked about platinum back in Beaver Creek, if you remember. It did really well since then. I still continue to believe that platinum is probably the most interesting, most promising of the three metals, physically speaking.
Yeah.
Of course, there's other sectors in the commodity space that should catch up now, copper, oil, but overall gold is leading the whole commodity sector. And within the precious metals, I can see that silver has taken the lead. So silver has broken out above $50, 45-year cup and handle pattern, massive energy that has been compressed over the years. The breakout is there very clearly. 54, 45-ish was the new all-time high in silver. So basically the pattern is resolved and is completed. And yes, we got this pullback below 50 again, but as of today, silver is already trading back at 51. I just said before, 53 is my next target from this inverse head and shoulders pattern. And I think silver should take the lead now, similar to what we've seen in the 1970s from 1978 until 1980, when silver went from $2-3 up to $50 without looking back at all. So something like this, I can imagine. My target out of this big 45-year cup and handle pattern, the longer term target is at least $100. On the panel yesterday, I showed a logarithmic chart, and it could take silver to $2, $3, maybe even $500.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored. with nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton. The upside here is tremendous. But Borealis is just the beginning. Through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and a $121 million NPV at $1,800 gold, we're building a hub-and-spoke model designed to deliver scale and efficiency. Our vision is bold, to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
You'd think adjusted for inflation, silver should be climbing up towards the triple digits eventually, shouldn't
Yes,
you? I mean,
yeah,
you'd think so, wouldn't you?
yeah.
Good news on silver, actually. Mexico seemed like they might be finally dishing out some permits. I saw Silver Tiger obviously they announced their news, I think it was Friday after market closing.
Right.
I was eagerly looking at the share price yesterday morning, Canadian time. So they've done well. This now opens up actually for a lot of these. There's so many of these good companies in Mexico waiting for. You've got Discovery Silver, you've got Go Gold, there's so many of them. Obviously Silver Tiger, the first beneficiaries of the permit. I'd assume because it was an amendment permit, so it was a bit easier to get through. But yeah, how are you seeing that shape out moving forward?
Well, I think for Silver Tiger, it's transformational.
Oh, it's huge, yeah.
It's huge, and I mean the company has been waiting for it for a long time, and I understand often for shareholders maybe it's a little bit difficult to understand and to be patient, and then management gives some indications that it might be just a few months down the road, and then it takes longer because all these bureaucrats in the governments they do their own thing. You know, you cannot control that or manage it.
In fairness, every single company I spoke to waiting on permits in Mexico this year were expecting it in the first quarter, second quarter. Everyone, so they weren't. Yeah.
Yeah, so that I understand that it's sometimes a little bit frustrating.
Yeah.
But if you do your homework and you understand the track record of the management and the team and everything, and then you just have to be patient and stick with them. And rightly so now, Silver Tiger investors got rewarded nicely. Stock popped up nearly 20% yesterday, and I think that's transformational for the company. So they can build the mine within one and a half years, I guess. So they will start producing silver in a totally different
in an
silver price
like
environment.
well.
Yeah,
I mean,
it's unbelievable. So Glenn will need AI to calculate the numbers, you know.
No, to be honest, most people who watch the channel will know Glenn. He's been on the show so many times. We've been tracking that story since it was like a 17-cent stock, right? Yeah, no, super happy for him. He's been absolutely around. Hopefully we'll get him on the channel and do an update with him separately anyway. But in terms of the way you're balancing or sort of looking at the market, are you now shifting gears more towards the silver junior? Good. Are we in that phase of the market where we're going full leverage? We're going silver juniors.
I've been doing this already during the year, of course, because I mean I've been pounding the table now for more or less a year that silver will go to $50. So that has been achieved. And like I just laid out, I think overall, with hiccups of course, but overall silver is now on the way to $100. This can happen very quickly. This can take a year or two. I don't know. But I think this is the environment where you want to have a very healthy chunk of your portfolio in silver mining stocks. Yes, because they give you nice leverage. I think there's a repricing already happening. Of course, we just mentioned Mexico, but there's so many other drivers. And I mean, the physical silver market is very tight. I don't see any big turnaround here. No. I think we won't see silver at $30 anytime soon, if at all, anymore. So no, you want to be in silver miners, and I think now this pullback has brought in some good opportunities because there were some nice pullbacks, right?
Yeah.
So while I was a little bit more cautious back in Beaver Creek, or at least starting to recommend maybe take a few percentages off here and there, like to take some profits off, like 5, 10, 15%, not too much, but trimming a little bit the positions just to be raising some liquidity and then to be ready once new opportunities show up. And I think we are there now where you can employ the money for new opportunities. If, worst case scenario, gold and silver would, instead of just going sideways to higher, do one more leg lower, we cannot rule it out. Of course, the mining stocks might suffer a little bit more. And in the situation where we are right now, with so many newbies having bought into the mining stocks in September, October, late, they might be underwater and then tempted to sell their positions during the tax loss season, right? So that might be the worst case scenario, that we see some more pressure.
I guess because we do have tax loss coming out up in December. You'd think anyone who got in, like you were saying before September, though, won't be doing any tax losses, will they? They should have. Most of those people would have made money.
Right,
even
but anybody who came late.
But anyone who, you're right. Anyone who's come in October potentially might want to do some tax loss selling in December, put in some weakness on.
But I think only if the metal prices suffer a little bit more.
That's it. Yeah,
if you can see the traction is still higher and basically everything is going still in the right direction in the trend,
then those who got in
they
October probably will be all right.
Yeah.
Okay. Just quickly as well on the platinum side of things, you said that's obviously a metal that you see a lot of upside in, and just from a price basis, you look at where platinum was during the COVID period versus gold. I mean, it was so much higher, and you look at palladium as well; it's so much better. Are you seeing platinum, because there is a lot of industrial demand for platinum, of course, that is the main demand driver. Are you now anticipating that there will be a shift in more investment demand in platinum?
I think that is the big driver in my thesis. Platinum is 30 times scarier than gold, but it trades at 1/3 of the price of gold, right? And I think we mentioned that in our last interview already. Back in the days when I started out in the sector, platinum was always at least double the price of gold. So I think it has huge upside from here. And I think at the end of the bull market, platinum should be more expensive than gold. So it's actually very simple, my thesis. And I mean, just from a time perspective, platinum woke up in April, May this year. The gold rally is already running 1.5 years at least. So not only from the price, but also from the time perspective, I think platinum has much more work to catch up here. And I think it gives you also the best risk reward. And we know it's 30 times scarcer than gold. And there's not many countries producing platinum. Actually, very few.
There aren't.
And they all have either challenging situation or they're basically on not friendly countries.
It's fascinating, isn't it? Because essentially it is Russia, South Africa, and the US, and the US is somewhat scaled back a bit. And South Africa, they're getting deeper and deeper in terms of the mines. Russia are having equipment problems since the sanctions. And then they had all that price collapse as well. So that a lot of these mines weren't making money over the last few years. You could see that space getting even more scarce. I think this lift up in price though has probably been a sigh of relief, because I think a lot of these mines were on the verge of going away.
Probably. No, and I mean, look, a platinum coin is just beautiful, and it's cheaper than gold. I mean, and again, it's much scarier.
Well, I know we're talking to Mark Faber later. I know he's a very similar thesis to you on platinum. Sees a lot of upside to it. Over the next 12 months, we're not crystal ball time, but where are we going to be this time next year, do you think?
Next year, this time. I think we should trade above $6,500 probably
per ounce.
Yeah,
wow.
Because I mean, this is a parabola, right? I mean, it's accelerating. It would be surprising if it doesn't. So, I think that's probably my best call right now.
Surely that logic, you'd think silver would be a bit...
Probably somewhere between $70 and $100. Yeah.
All right. Well, I hope you're right.
Yeah. Let's see.
I think everyone here would be more happy than they already are. So that'd be a nice place to be.
Always remember, the best is yet to come in the precious metals bull market. The last 1/5 or 1/6 of a bull market brings the steepest price rises, right? So, so we are in an acceleration period, and I think the blueprint is the last 2-3 years in the 1970s. So, yeah.
Interesting. Florian, thank you for your time.
Yeah, welcome. Always a pleasure, Peter.